Hello and welcome to the final trading day of the week. This is Business Incorporated live on Channels Television. We'll be tracking the markets, the economy, and of course, we check out all that affects your pockets. Here are the stories that matter to you. Egypt launches first dried egg shipment to Middle East. Kenya inflation rises sharply for second month as fuel costs climb. And Dangote Refinery becomes world's largest jet fuel exporter. And great to have you join us this half hour. I'm Will Ibong, and as I mentioned, it's the final trading day of the week. As always, let's get a check-in on commodities, beginning with the oil space, where we see oil prices fell over 1%, and that's on reports of the potential U.S.-Iran ceasefire deal. We see natural gas, that was up, however, 1.31% at $3.32. And we see Brent down 1.73% there, now $92.09 per barrel. WTI also following suit, that is down 1.88% at $87.24 per barrel. That's a sharp drop for oil. But let's look at metals space now and see how they performed. Is there hope for them? We see spot gold, that's up, yes, 0.82% at $4,569. Spot silver, that's also up 0.01%. Mixed trading there for the metals. Platinum is down 0.05%. Palladium up, and we see copper down 0.45%. Moving on now, Dangote Refinery, that's the petroleum company, has emerged as the world's largest exporter of jet fuel in April, and that's according to the refinery's chief executive officer, David Bird. The achievement comes as the 650,000 barrel per day refinery ramps up production amid disruptions to global fuel supply routes linked to Middle East tensions. Industry data shows the refinery exported record volumes of aviation fuel during the month, strengthening Nigeria's position in the global refined products market. Next, we see Kenya's government is defending its fuel import deals with the Gulf suppliers amid opposition concerns over transparency and pricing. Officials say the agreement helps secure stable supply and protect the country from global oil market shocks. But critics argue the arrangement lacks transparency and has not eased high fuel prices for consumers. The government insists the deals remain vital for energy security. Now, still in Kenya, Kenya's inflation rate jumped to 6.7% in May from 5.6% in April. It's marking the second straight monthly increase and the highest level since January 2024. The sharp rise was driven mainly by higher fuel prices, with transport costs surging 16.5%, while food and non-alcoholic beverages that rose 9.4%. The latest figures are expected to increase pressure on policymakers as rising energy costs continue to feed through the broader economy. Now to the north of Africa, where Egypt has launched its first shipment of dried egg products to Middle Eastern markets, marking a major step in the country's push to expand value-added agricultural exports. The move opens a new export channel for Egypt's poultry industry as authorities seek to boost foreign exchange earnings and tap rising regional demand from food manufacturers and hospitality businesses. The expansion comes as Egypt ramps up efforts to open new export markets across the Gulf and Africa. And now let's come down to the south of Africa, where we see the Reserve Bank, the central bank, has raised interest rates by 25 basis points, citing mounting inflationary risk as hopes for a swift resolution to the Middle East conflict continue to fade. This marks the first interest rate increase since May 2023. The decision by the Monetary Policy Committee was closely contested, with 4 members supporting the hike while 2 voted to keep rates unchanged. The central bank governor said it is vital for the SARB's credibility to act quickly and with conviction.
Given the uncertainty, central banks are still mostly on hold. Markets now project major central banks will increase rates this year, having dropped expectations for cuts. Moving to South Africa, we have lowered our growth forecast for the next 2 years. Before this shock hit, the economy seemed to be gaining momentum, with the incoming data mostly positive. Now, however, we face a painful combination of higher global uncertainty and reduced disposable income. This will hit both investment and household consumption, which have been our main growth drivers.
As was widely expected, the Reserve Bank decided to hike interest rates today by 0.25 percentage point. This is a response to the increase in inflation as a result of higher fuel costs since the Iran war broke out. Of course, the Reserve Bank can't do anything to prevent a spike in inflation when oil prices increase. But what the Reserve Bank tries to do is ensure that this doesn't become entrenched. In other words, that the new higher rate of inflation doesn't become the base for all future price setting as well. Of course, the inflation and interest rate trajectories will be very dependent on exactly how the Iran war unfolds. But at this stage, premised on some easing in the war and oil prices from the second half of this year, this interest rate hike might be enough, as also echoed by the Reserve Bank's own forecasting model. Unfortunately for consumers, this gets added to the significant increase already underway in the cost of living, and our data suggests that they were already under pressure in the first quarter of this year before the spike in fuel prices.
And now most African markets, such as equities, have resumed from the Muslim holiday for the final trading day this week and also for the month of May. A look at NGX trading in very slight flat territory at intraday, 0.01%, 0.02% last I checked. Now we see 249,756 points. That's still below the 250,000 points that we're used to right now. And the GSE in South Africa, that's down 0.11% at intraday, now at 114,000 points, now 73. A lot is going on for the GSE, especially the uncertainty around the US-Iran deal. That's having a lot of impact on that. Let's look at other markets. Egypt is closed from the holidays, still closed today, 0.38%. That was traded last at. And we see Kenya's trading yesterday ended in the red, 0.07%. About Nigeria's fixed income markets, we're going to be looking at that now. I had a very busy May from the CBN's rate decision to billionaire bond auctions and liquidity battle playing out in real time. Joining me to break it all down is Chuka Nwachukwu, Chief Dealer and Group Head of Trading at UBA. Chuka, it's good to have you join us after a while. Looking at Nigeria's fixed income markets now across the month of May, we see a lot, yields, auctions, liquidity. How would you summarize the market's performance overall?
Thank you, Will, and good to connect again. Month of May was a highly liquid month. We had well over 10.9 trillion came in place of MTP maturity, OMO maturity, coupon payment, as well as FAC, about 1.6 trillion was shared among the three sectors of the government, federal, state, and the local government. And so that made the month highly liquid. Despite the fact that EMO is trying to borrow as cheap as possible, market continue to demand for higher yield, especially on the TBO side, especially with the 10% tax on the treasury bill. So market continue to demand on the higher yield. However, due to the liquidity in the system, most investors had to play within the subdued yield level due to the fact that they need to reinvest some of this liquidity back into the fixed income space, which obviously is safer than other investment options.
Okay, let's just zoom in right there to the treasury bills. We saw for the auction in May, we saw that a subscription oversubscription that hit 1.2 trillion naira against 700 billion naira that was on offer, and we also saw the DMO raising a full 600 billion naira through the bonds in May that featured coupons that was as high as 22.6%. on the long end, as the short end, which was the 2035 instrument. Which segment would you say of the market that had the strongest month, and why?
So if you look at the general performance on the treasury bills in the month of May, we had a couple of auctions. The total offer, was about above 4 trillion in all together. Total subscription, pardon me. Total offer was over 1 trillion, and then the total allotment about 1.2 trillion. You can see that with that, there's a lot of interest on the treasury bill side. So the government itself, being aware that investors are also wary of the 10% tax, government through the DMO is continuing to push, for to lower, higher the yield, for example, is the more expensive the government is going to go. So they continue to push for lower yield. On the bond side, demand was subdued. In fact, on the bond side, a total of 600 billion was offered. Subscription was below that amount, about 500 billion. However, that pushed government and the DMO especially to, to fuel that or the leftover demand, to competitive bids. So that obviously has, has shown from the subscription, especially on the TGO side, that appetite for Nigerian and investment on the Nigerian fixed income is quite it's something that is quite lucrative, and investors continue to play on that space. So for the bond, I think that one of the reasons why the suspicion is the investors' appetite is kind of like reduced is the fact that investors are looking at rate cuts towards the end of the year, or before probably the next NPC meeting, or before the end of the year. So everybody is trying to play safe, and that's why you see that most investments, most traders, prefer to play on the shorter end of the curve, which is the treasury bills.
Okay, let's stay on this bond slide now. Let's in there. The government issued a bond maturing in 2035, coupon 22.6%, but a longer bond maturing in 2037, we see that at 16.25%. Now, for the average viewer out there, that sounds like the longer you wait, the less you earn. How do you explain that to them?
I think it's a bit confusing for those who don't play in that space. However, you'd represent the true return to an investor. The 2035 bond, for example, printed at 17%, while the 2037 printed at 17.04%. And the differential has already been reflected in the pricing of the bond. So that obviously would not affect the level of investment. It's just you have to play on the yield curve, and that's obviously what will give you, the percentage you need in terms of investment. It's just as simple as that.
Okay, so let's looking at what CBN has done already, mopping up over 4.5 trillion naira from the system in 1 week. We are expecting billions to still flow back into it. Is this like the CBN is fighting a losing battle here in terms of liquidity in the system?
No, it's not a losing battle. So the thing is, the market this period is highly liquid, and that's why you see that CBN continue to offer OMO, even though it's on the short end. They really not offer their OMO above 90%, 90 days, which is about 3 months. So the more liquid the system becomes, the more OMO and the more CBN continue to mop up the excess liquidity in the system. And also, it also helps CBN, because some of these FPIs, foreign portfolio investors, we call them hot money, also coming through the almost system, bringing the needed FX for exchange for the OMO bills. And so you find that All in Omo, for example, is around 21, 22%, which obviously is good for any investor. So I do not think that government CBN is losing the battle. I just feel that, the market is highly liquid this time, and some of us who are in the system know exactly what CBN is doing to continue to mop up the excess liquidity in the system. Don't forget that part of the primary objective of this current CBN is to continue to monitor price stability, and obviously when you have excess liquidity in the system, which will affect the inflation, and then of course and that will obviously affect probably what they're trying to do. So continuum mop up is part of everyday life of the trader, as well as CBN continue to ensure that the system is stable.
Okay, can you just say maybe like you say in 30 to 60 seconds, can you just tell me what's the outlook for the month? We've ended May, possibly, and we're going into June. What do you see for June in fixed income markets? Very quickly.
Yeah, so June being the last month of the first half of the year, we expect to see that the yields on the TPO side will continue to hover between 16 to 18 level for the 1 year. And then we also expect investors to continue to play more on the TPO side, being that the longer end of the core of the security, which is the bond side, investors are kind of like a bit wary for now. Put one eye on what CBN will do in terms of rates. However, so for me, going into the month of June, we continue to see, on the TPO side, especially with the excess liquidity in the system.
So higher yields, that's what we're expecting. Thank you so much, Chuka Nwachukwu, Chief Dealer and the Group Head of Trading at UBA, for your perspective on the show.
Thank you. Thank you.
So let's take a quick break. Business Incorporated continues right after. Don't go away. Welcome back. We'll check in quickly with U.S. markets. We see that ticking higher in pre-market trade. We also see Asia markets that closed a mix for today, final trading day. But let's look at Europe markets now, and I'm joined by Lars Alter in Berlin. Lars, what's it looking like in the final trading day for today and the month of May?
Yeah, Will, it's good to be with you. I can tell you European markets are showing some optimism towards the weekend. Except Frankfurt. Frankfurt was seeing some weakness now, but the rest is doing pretty well on this Friday. And that is, of course, after rumors that peace deal and especially a reopening of the Strait of Hormuz could be happening shortly. The oil price was the first measure, of course, that we saw react to the news. Oil dropping, of course, but markets are not showing the same strong push upwards. They certainly tried. Talking to some traders, we're hearing that there was sort of a push into the markets, but there is just not much conviction yet.
Okay, so let's turn aside and see what else is happening, especially in Germany. The agricultural and pharmaceutical giant Bayer is in legal trouble again. The company is facing antitrust charges in the United States. Lars, what can you tell us about those charges?
Yeah, this is once again not about Bayer's core business, but about Bayer's subsidiary Monsanto, a U.S. agricultural company that Bayer took over in 2018. Now, the lawsuit is filed by an Iowa-based seed company. That a lawsuit states that Bayer, or Monsanto, has monopolized the U.S. market for genetically modified corn seed, thereby generating, and I quote, hundreds of millions, if not billions, of illicitly earned dollars. The charges are that Monsanto has controlled the market for corn seed that is resistant to its widely used herbicide Roundup, and that the corporation prevented competitors from developing their own generic versions of a specific Bayer-controlled corn seed. Now, this has obviously then driven up costs for farmers and independent seed companies. Now, I should point out that seed companies generally patent their seeds, and that for decades those seeds then went hand in hand with fertilizers and weed killers that would be engineered to help that one particular plant but eradicate everything around it. These protections are normal, but apparently and definitely in the eyes of the competitor here, Bayer has taken things too far.
But this is not the first time that Bayer finds itself in U.S. courts over Monsanto, is it?
Yeah, far from it. Indeed, Bayer has been in and out of court for years now, and it has always been over Monsanto's main product, that weed killer Roundup that I just mentioned. Charges have been that it can cause cancer. There have been deaths that some have linked to the use of Roundup by landscapers and gardeners. And it has already cost Bayer billions to settle some 100,000 lawsuits, and there are still more lawsuits incoming. It should be noted that there are enough experts and studies out there that say that there is no link between Roundup and those cancer cases. But in court, there has not been that one verdict to settle this once and for all. Bayer has put money aside for future settlements. Meanwhile, they probably still like their acquisition from 2018. The group's profit in its agricultural division in crop science rose by almost 18% in the past quarter to 3 billion euros. So no matter these legal costs, there is still a lot of money to be made there.
Definitely, Lars. Thank you so much, Lars, for bringing us the latest and the updates from Berlin and also from the Eurozone. We'll always keep an eye on that, and you're going to be tracking it for us. Thank you so much, Lars, also from Berlin.
Thank you, Will, and have a nice weekend.
And you too. So now let's look at the crypto space and see what that is telling us today, especially with oil prices ticking down. I should be seeing green, but I see red. Yeah, Bitcoin is down 0.29%, now $73,268. $1,000. That's a lot for you guys, especially climbing back from that low of below 70,000 that we saw. Look at Ethereum is in the green, however, up 0.31%. XRP is in the green. Solana is in the green. TRX is also, however, in the red. We see Leo. Doge, is Doge here? We don't see Doge. I can't find Doge. Okay, Doge is in the green. So ADA is also in the green. So a lot of investors are probably making some money there. But let's look at some headlines and see what's is making the rounds there in the crypto space. Paxos says its approval as a blockchain-focused clearing agency represents a critical piece of financial market infrastructure as Wall Street becomes more interested in crypto blockchain infrastructure platform and stablecoin issuer. Paxos said it has become the first blockchain initiative firm that the U.S. Securities Exchange Commission has granted registration as a clearing agency. We'll keep an eye on that developing story. Now, France's Financial Markets Authority has warned crypto firms, that's next up there, to secure MiCA licenses before the June 30 deadline or leave the market. The warning comes as Europe moves towards full enforcement of the markets in crypto assets framework. Let's see what's next. There we see the federal government in Germany is now requiring crypto service providers to submit tax-related user information to the state. The data will be shared with other nations, both within the EU and beyond, to allegedly make taxable coin transactions more transparent. And that's what we have for you from the crypto space, and that's a wrap on Business Incorporated for this week. I'm Will Ibang. Bye for now.